That's there from the Philippine Stock Exchange. The ringing of the bell there happening in just a few moments, kicking off trade today and in celebration of International Women's Day. PSE officials there, as you can see, led by PSE President Ramon Monzon and United Nations Women Philippines representatives honoring gender equality in support of all our girl bosses, sisters, moms, aunts, lady friends, and everyone else who support us and love us for who we are. A happy International Women's Day, everybody. 3 cheers to all and to the upbeat trading ahead on this final trading day of the week. Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. President Trump exempts goods from Canada and Mexico, the latest in his trade policy twists that whipsawed financial markets. Semiconductor giant TSMC reassures Taiwan as it invests $100 billion in the U.S. What does it mean for the Philippines' electronics exports? And how insulated is the Philippines really from President Trump's tariff wars? U.S. President Donald Trump pulls back tariffs on Canada and Mexican goods covered by the U.S.-Mexico-Canada trade agreement. Trump retreated after a phone call with Mexican President Claudia Sheinbaum, where she said that her government is working to curb the flow of fentanyl into the U.S. Trump also spoke with Canadian Prime Minister Justin Trudeau. Officials said the call was, at times, heated. Washington already delayed tariffs on vehicles falling under the USMCA at the request of 3 major automakers. The USMCA passed during Trump's first term. Among the products exempted from duties include agricultural goods that U.S. consumers regularly buy. But other imports, including computers, medical equipment, and beers, still face a 25% tariff, which took effect on March 4.
And I spoke to the President of Mexico, wonderful woman today, and we helped them out with the problem they were having to do with the tariffs, short-term tariffs, and we had a very good conversation. Also, we discussed drugs, and they were working much harder lately. Do you notice that? On people coming in and drugs, and we've made tremendous progress on both.
So I said to him, we are getting results. President Trump, now that you put in the tariffs, how are we going to continue cooperating, collaborating with something that hurts the people of Mexico?
Just about an hour ago, Trump signed an executive order establishing a strategic Bitcoin reserve. In a post on X, White House crypto czar David Sachs says the reserve will be capitalized with Bitcoin owned by the federal government that was forfeited as part of criminal or civil asset forfeiture proceedings. And the markets have been on a roller coaster this week as investors await what happens next in the White House. The tech-heavy NASDAQ and the Russell 2000, which tracks small companies, are both in correction, declining by more than 10% or from their recent peak. S&P 500 is on course for its worst week since 2022, sliding by nearly 4%. The index is also close to falling into correction. AI stocks are among those that post the biggest declines. Palantir Technologies falls by 11% and Vistra drops by nearly 10%. Meanwhile, the U.S. dollar weakens while the safe haven yen and Swiss franc advance as jittery investors turn risk-averse and worries mount over the impact of Trump's tariffs. Let's take a look at how the global markets have performed in Thursday's trading. All of the three U.S. major markets were down even after Trump offered a reprieve on the tariffs. The Dow has slid by about 1% and the S&P 500 by about 1% as well, and the Nasdaq by over 2.5%. U.S. futures are indicating that Wall Street has staged a partial recovery. The Dow is now up about 0.1% along with the S&P and the Nasdaq. Meanwhile, let's check on the European markets and see how the Pan-European Stock 600 closed. It closed flat, as the European Central Bank's rate cut decision offset those pressures from rising long-term bond yields. London's FTSE down by over 1%, and Germany's DAX is up by over 3%. Asian markets have fallen today, Friday, in just the first hours of trading, mirroring those losses we've seen on Wall Street. Take a look at those down arrows. The S&P ASX 200 down about 1%, along with Japan's Nikkei 225. Investors await today's release of the U.S. non-farm payrolls report, as well as the jobs report later today in the U.S. Let's head back here to the Philippines. We're still waiting for the figures to come in from the PSCI. Take a look at how that rally has sustained the markets all throughout this week. We've had a one-month high on Thursday following Trump's pause on the auto tariffs, and the peso has opened stronger. At 57.32 the dollar, the previous close was at 57.32 per dollar. Peso closed yesterday to a 5-month high against the greenback at 57.32 per dollar. Now, the European Central Bank eased rates by 25 basis points to boost Europe's stalling economy. The ECB reduced its key interest rate from 2.75% to 2.5% in 6 of 7 meetings. Europe's economy is bracing for Trump's tariffs, as well as a need to increase military spending.
We have huge uncertainty. Some people have used the adjective phenomenal uncertainty, and we debated as to whether it was high and rising, but suffice to say that it is all over. So we have risks all over, uncertainty all over.
On a week, Trump's tariffs and relief whipsaw the world's markets. Investors are now reallocating investments to economies considered relatively insulated. So that includes us. Our next guest says, anecdotally, companies from North Asia are looking to the Philippines as an alternative destination. Joining me now from Makati is Jonathan Ko, Singapore-based Standard Chartered Bank economist and foreign exchange analyst. So good to see you, Jonathan. Thank you so much for making the time.
Thanks, Cathy. Thanks for inviting me here. It's a pleasure.
Yes, I know that you've been speaking at an industry summit there and have had a few client meetings on the side. What's the overriding mood, if you will? Just speaking with those in the business and investment community here, what is their sense of the Philippines' degree of exposure to Trump 2.0?
Sure. So I think the sense for the Philippines itself, especially that I've done meetings around the region as well, is I would say it's one of cautious optimism, and mainly because with regards to Trump 2.0, the Philippines economy is a lot more domestically driven, so it's a lot more insulated. 75% of the Philippines economy is driven by domestic consumption or domestic demand, versus, for example, the likes of Singapore, where more than 60% is driven by external demand. So I would say it's more of cautious optimism at the moment.
Yeah, it's a good phrase, cautious optimism amid the whipsaw that we've seen in global markets. You were quoted by Business World earlier saying, anecdotally, that what you are seeing and hearing is that a lot of companies from Korea and Taiwan actually are looking at the Philippines as an alternative destination. But what exactly do they like about the Philippines?
Sure. So I think ultimately, when you invest in ASEAN as a region, or Philippines as a region, I think firstly, in terms of Philippines being targeted in terms of bilateral tariffs, we think that is very unlikely. And the reason for that is the Philippines only runs about a $4 billion trade surplus with the US. So from a revenue perspective, I mean, US imports from the Philippines is not even that much. So we don't really expect Philippines to be on the radar of the Trump administration. Secondly, I think investing in the Philippines, you have a high quality of labor. and the population is mostly English speaking. So and you also have a very young working age population. So very clearly, I think those are the demographics that actually work in the advantage of the Philippines as well.
So that's demographics and the relative insulation from what's going on overseas. But to what extent is that relative confidence showing up in the markets? We've seen local stocks up 4 straight days, though still below 6,200, yields at 1-month highs when you look at the 10-year Treasury. And the peso has been relatively stronger versus the dollar in the 57 level.
Sure. So I guess in terms of FX, how we are looking at it is in terms of the dollar, or rather in terms of Asia FX, there are a few crosswinds. So we basically look at it in 3 ways. I think first is basically the Trump trade, second is the Fed trade, and lastly is the CNY trade. Now, in terms of the Trump trade, it's really in terms of thinking about it in terms of potential negative US policies being inflation inducing, or potential higher fiscal spending from the US being fiscal inducing, resulting in the Fed having to keep tighter monetary policy and higher interest rates, and therefore being a stronger dollar. Now, from that perspective, if let's say the dollar strengthens, currencies which basically have a high beta to the dollar will actually do worse or depreciate more against the US dollar relative to other currencies in the region. Now, the second is the Fed trade, and it's basically what markets are pricing in terms of Fed cuts. And at the moment, markets are pricing in about 3 Fed cuts. I mean, we are calling for just 2 at 50 basis points. But I would say 50 to 75 basis points of pricing in terms of Fed cuts is probably quite fair. And the lastly is in terms of the CNY trade, and China has basically been keeping CNY relatively stable. And usually, again, if let's say CNY depreciates, then it's going to be the currencies that have the high beta to CNY that are going to depreciate. So in terms of how things have played out so far this year, I would say that because the Trump trade hasn't really played off in terms of, I think you were just mentioning earlier, Trump basically walking back on some of the tariffs under the US for goods under USMCA. So very clearly the dollar has kind of weakened, and so that has in a way helped Asian currencies. But the low yielders, those more externally exposed, that actually weakened a lot more in Q4 last year, actually outperformed.
Just as a final point, we got 15 seconds to go. Where do you see the peso trading in the next 3 to 6 months?
Sure. So I'm currently looking at about 57 to 59. A lot of it is going to depend on the dollar.
All right. Well, thank you so much, Jonathan Ko of Standard Chartered. Safe travels next to Cebu. Appreciate the time. We have world news headlines coming up. Semiconductor giant TSMC investing $100 billion in the U.S. And we check out the first elevated expressway outside of Luzon in the Philippines. Keep it right here on Money Talks and One News. Welcome back to Money Talks. I'm Cathy Yang. Taiwan's president and top chip maker Taiwan Semiconductor Manufacturing are defending its $100 billion expansion in the U.S. Taiwan President Lai Ching-te called the move an historic step for Taiwan and its ties with Washington. Lai also denied claims the U.S. pressured Taiwan over TSMC's decision.
台积电将透过这项增资案
This is TSMC's moment, Taiwan's moment, and a historic moment for U.S.-Taiwan relations. The Taiwanese government did not face pressure from the United States during TSMC's investment process in the U.S.
人类的科技生活。
Meanwhile, TSMC CEO C.C. Wei said rising demand is driving expansion, but Taiwan will remain its core.
客户的需求一直增加。
For TSMC, our investment plans are based on customer needs, and we are very cautious. The amount of investment in the U.S. may seem large, but it is still not enough to meet demand. Therefore, our plants in Taiwan will not be affected, and we will accelerate our progress.
的计划
The Philippines plays catch-up to its ASEAN neighbors such as Malaysia and Singapore in the chip manufacturing industry. Vietnam and India have also been increasing its focus on semiconductor development. The Philippines hopes Taiwan's TSMC will help it build chip fabrication operations here. With us now for more is CEPI President Dan Lachica. CEPI is the semiconductor and electronics industries in the Philippines. So good to see you, Dan. Welcome to the program. We can't quite hear you, Dan, but you know, so much has changed from 4 months ago when you came in on an industry forum saying 2025 is going to be the year that electronics exports are going to rebound. In fact, you projected 5% growth. Correct me if I'm wrong. In fact, what is the status of that now, Dan, under Trump 2.0? Oh, I believe we're having some issues with the audio with Dan. We'll come back later on and carry on that narrative in a moment. But meantime, the Bangko Sentral ng Pilipinas reports on the latest figures in lending and liquidity. Lending grew by 12.8% in January, up from 12.2% in December. Preliminary data from the Bangko Sentral shows loans to residents rose by 13.3%, while non-resident loans fell by 3.5%. Meanwhile, production loans rose by nearly 12%, with growth in real estate, energy, trade, and transport, while consumer loans rose by over 24%, driven by credit card and car loans. The BSP also says the country's money supply grew by 6.8% in January, reaching 18.1 trillion pesos. This was slower than December's 7.7% growth. Bank lending pushed domestic claims up by 10.8%. And private sector claims rose by 13.1%, government borrowings by over 7%. Foreign assets grew by nearly 3%, with the Bangko Central's holdings up 4.2%. Meanwhile, banks' foreign assets declined because of higher bills and bonds payable. The Bangko Central says it's going to keep lending conditions and liquidity stable to support price and financial stability. Tourism revenue in the Philippines hit over 65 billion pesos in January, up nearly 79% from last year. The Department of Tourism says this also exceeded pre-pandemic levels of 43 billion pesos. Tourism Secretary Cristina Frasco calls it a sign of industry growth, which also creates jobs for Filipinos, especially in rural areas. In 2024, total revenue reached over 760 billion pesos. Meanwhile, the country welcomed over 1 million foreign travelers in early 2025. South Korea remains the top source of visitors with nearly 300,000 arrivals. The Tourism Department expects numbers to rise with Korean star Seo In-guk as tourism ambassador. The country's first elevated expressway outside Luzon will soon begin construction in Cebu province. The details in this report by One News Cebu correspondent Dale Israel.
Traveling from Cebu City to Mactan Cebu International Airport will soon be faster once the Lapu-Lapu Expressway opens and connects from the Cebu-Cordova Link Expressway or Cebu Third Bridge. With a mixed elevated expressway, travel time of 2 hours from Cebu City to the airport will be cut to only 16 minutes. This will also serve as an alternative road to the narrow streets in Mandaue and Lapu-Lapu City to the airport. The expressway is 12 kilometers long from the foot of CCLEX and will be managed by the Lapu-Lapu Expressway Corporation together with the Metro Pacific Tollways Corporation of the MVP Group. The entire project will cost 27 billion pesos and will be constructed under a PPP or public-private partnership with the Lapu-Lapu City government. Project coordinator and Lapu-Lapu City Legal Office Chief James Alan Saison says a few houses will be affected by that project.
We will have to determine that after the detailed engineering design. Okay, after the MOU signing, the detailed engineering design will commence. Mayor has been very clear about it. The least disruption.
The Lapu-Lapu Expressway is the first elevated expressway outside Luzon. It is also the second largest project of the MVP Group for Cebu after CCLEX, dubbed as the most beautiful bridge in the country. According to Chairman Manny V. Pangilinan, he considers Cebu as his second home.
I promise to build a better future for Cebu and the Cebuanos. I promise that the roads we will lay down starting today will lead to progress. I promise that the journeys that the Cebuanos will take will not be too long, not too trafficking, distance not too great, and your dreams not too far to achieve.
MVP comes back to us with a proud track record to show. Look at the most beautiful bridge, the iconic bridge, and now the longest bridge in the entire country at 8.4 kilometers, the CCLEX, where all of us Cebuanos are always so proud.
Toll generated from the expressway is at 3 million pesos per day.
While the expressway caters mostly to airport passengers, it will now be easier for the delivery of goods from Mactan Island to Cebu City. Dale G. Israel, One News, Cebu.
Philippines private and public sectors have come together to boost youth employability and upskilling at a time AI threatens to displace jobs worldwide. 3 years on, how are they doing in the race to upskill? With us now for more is a Jobs Next program stakeholder, Citi Philippines country officer and banking head Paul Favila. Good to see you, Paul. Welcome to the program. So, Paul, how are you doing preparing our youth for emerging jobs? Do you think we're winning the race?
I think we're there. We're seeing very good progress in terms of this particular agenda. It's very important. I think we need to move faster. But having said that, given the experience that we've had over the last number of years, we're seeing a very good amount of cooperation both between the public and private sectors in addressing this particular challenge.
Right, it really is a whole-of-nation approach. I was just looking at the names of those who took part. It's really critical, but getting to execute is key. So how are you all managing to get the Jobs Next program reach more youth? Because your partners include Philippine Business for Education, TESDA, among others.
Correct. What's very encouraging here, Cathy, is that we have now seen the transition where we acted as a catalyst to begin this quest. And now we are actually seeing the local governments themselves take on the program. So we have graduated into something that is, I guess, more sustainable for the longer term. And I'm very elated to hear that a pending bill in Congress, the Jobs Next bill, is actually seeking to institutionalize this, to your point. It's a whole of government approach.
And policies coming in, institutionalizing, what sort of numbers are we looking at? Because the last was about 2,600 youths already impacted by this program.
So 2,600, that's a huge number across the nation. Around 10 local government units who have participated in the program. So we could see the significant impact of what this program has done. in terms of making sure that our workforce of tomorrow is ready as it deals with the new realities of the new economy, which is highly digitized. And that is at the core of this whole exercise.
Indeed, we'll watch those numbers go up and into the hundreds of thousands. Thank you so much, Paul, for joining us and telling us that good story. Paul Favila of Citi joining us. And you're watching Money Talks in One News. Coming right up, brain cells used as computer chips. Story on the world's first biological computer is up next. Stay with us. Dan, are you with us? Cathy, thanks so much for waiting. Dan, are you with us? Hope
Yes, I'm here.
Ayan, yay. Salamat Pasensya na't nagkaroon tayo ng mga issues.
No,
Pero tama-tama lang.
that's okay.
You end the week for us and I'm sure it's good news with all that's going on. Okay, kasi maraming moving parts, no? So make sense of it all. Yung CHIPS Act, tapos TSMC pa. Kasi di ba you asked for their help about, training us. So doon tayo. We'll be back in about a minute and then I'll go live.
No problem. Thank you.
All right. And then yung shot lang direct, siguro Dan Lachico back of SAPI joining us live. Dan, thank you so much for joining us.
You're welcome, Cathy. Thanks for having me.
All right, so many moving parts here. I wanted to touch on the statement you said about 4 months ago. You said 5% growth for the electronics exports for the Philippines. Has that changed with all that's happened with Trump 2.0?
Well, actually, that's optimism driven by the Create More Act. But for the past 2 years, we've seen an erosion from 2022 was our best year at $49.5 billion. We contracted by 8% the following year, and last year we contracted another 5%. So our projection this year is actually flat, but we're hoping we'd reach 5% with the Create More incentives coming into play.
I love the spirit, and that's just Create More. I was already talking about the tariff wars and Trump calling for an end to the CHIPS Act. Has SAPI been doing the maths around that? What is the U.S. import tariff rate, for instance, for Philippine electronics or semiconductor exports? And how does the tariff rate change now under Trump 2.0?
It actually caused a little scare because the initial statement was 25% tariff on all chips exported to the U.S. But as we've kind of waded through the noise, as you know, we have a lot of several U.S. multinational companies here, specifically in semiconductor assembly, test, and packaging, which export back to the U.S. And so it seems like at this point, anyway, we haven't been affected by any tariffs. So it's business as usual. So we're still optimistic about at least flat, if not some modest growth for this year.
But what about the reciprocal tariffs? Because that's the one on the back end. How would this tariff rate change with Trump's proposed reciprocal tariffs for all of the countries around the world, including the allies?
Well, again, it remains to be seen. But so far, what's important really is to establish a free trade agreement with the United States, bilateral, multilateral, because while today we're not seeing any impact, but it's evident that some of our members who deal with the federal government are seeing some, delay or if not cancellation of orders because we're not what you call the trade agreement compliance that we're up against. So as soon as we get those FTAs and of course DTIs on the ball working on it, we'll see that also lifted.
In the meantime, a lot of action happening in Taiwan. TSMC adding $100 billion in U.S. manufacturing, and the CEO just stressed that the investment is not going to affect investments in Taiwan, where it's going to develop and retain most of its advanced technology. So how do you see this impacting SAPI's plan to encourage TSMC to train Filipino workers and support its global operations?
Well, up until a few months ago, actually, we were in Phoenix last November with Secretary Sonny Angara of DepEd and Secretary Kiko Bautista of TESDA, and of course, Commissioner Ethel. And what had happened was with the CHIPS Act, there's $500 million of the ITSI fund that was allocated for 6 countries, Costa Rica, Panama, Mexico, Vietnam, Indonesia, and of course, the Philippines. And the intent really, while the CHIPS Act is meant to onshore high technology wafer fabrication in the States, it's beneficial to us because somebody's got to do the assembly, test, and packaging. And that will behoove, the United States to send part of that to the Philippines, which is actually our strength, assembly, test, and packaging. So what the ITSI fund did was to carve out something like $13.7 billion for Arizona State University to train our professors and workers on advanced assembly, test, and packaging, which will be relied upon to, package the high technology wafers coming out of the States. But unfortunately, that's kind of frozen at this point because you've heard about USAID freezing grants, USAID, and even the ITSI fund was frozen. But so we're looking at the avenues to continue the advanced assembly, test, and packaging because that's part of the new roadmap that DTI has funded.
Right.
We're going to grow the assembly, test, and packaging, IC design, and EMS, and hopefully, take baby steps towards having a lab scale or wafer fab, but we call it wafer lab in the country.
I'm going to take it at baby steps. And you got to tell us about that roadmap that you're going to be releasing very soon. Thank you so much. Danda Chica, SAPI President, joining us live. And that is Money Talks with Cathy Yang. Catch us again on Monday, 9:30 a.m. here on One News. Happy International Women's Day, everyone. Have a great weekend.